Welcome back. Well, we spoke about the paper sector, the logistics sector. Now it's time to discuss the FMCG sector, which is in focus on the back of rising global inflation. Many companies have hiked prices and cut costs to support margin. What is the outlook going ahead as we see prices softening from the top? We have Abneesh Roy, Executive Director, Institutional Equities at Edelweiss Securities, and K. Ramakrishnan, MD, South Asia at Kantar World Panel, who are joining us now to discuss the demand trends in the FMCG sector. Gentlemen, good afternoon. Thanks a lot for joining us. Mr. Ramakrishnan, let me come across to you first. Can you give us a sense of how demand has been in the month of May and June, and where is it coming from? Is it higher in the urban space or the rural sector?
Yeah, so to answer this, I need to look at the MAT data, which is the annual data of this year compared to the MAT data of the previous year. We definitely see a very, very marginal drop in the overall FMCG volumes. I'm not talking value at all because inflationary times value doesn't make sense. From a volume perspective, there is a marginal drop. And the drop is by and large coming from urban. Rural is almost holding fort, but holding fort also doesn't help because there is a population growth inherently of 2%. So which means rural is also dropping. The drop is bigger in urban. So there is a marginal drop in volumes.
There is a marginal drop in volumes, but can you tell us, how the raw material situation has been right now? Because you guys track a fair amount of pricing, and the companies usually pass it on via either promotions. If there has been a dip, or if there has been an increase, they do it via reducing grammages or increasing the MRP itself. You guys track that pretty closely. Has any interesting data come from that?
Yeah, so we track what consumers purchase. So all our information is derived from what consumers purchase and that database itself. So from that database, what I can definitely derive is the fact that, yes, multiple things are happening. See, inflationary times, definitely there's a pressure on the wallet. However, this time it's slightly different from the past in the fact that we are coming just out of a pandemic. So to that extent, a similar inflation was seen during the pandemic. So from that point of view, it was pretty similar as far as India is concerned. Now, to answer your question specifically on what has happened in each of those cases, one, definitely those key price points of 5 rupees, 10 rupees, etc. are extremely important, and one cannot get rid of that in India. So to that extent, there is a marginal volume reduction which we are seeing. The second important thing is that the percentage of households that are buying FMCG under promotion, that has seen a rise by about 5 to 6 percentage points, not basis points. So that's also a significant increase. So one, there is a drop in the pack size that people are buying. And within those specific units of value pricing, which is 5 rupees, 10 rupees, etc. kind of packs, there is a volume reduction. And thirdly, higher incidence of promotion in purchases by consumers. So all three are happening as a measure by the consumer to tackle the inflationary times.
Okay, so let us also get in Abneesh Roy of Edelweiss into the discussion. Abneesh, what is your sense in your conversation with the FMCG companies? Are they also of the view that yes, volumes are dropping, and what does it mean for FMCG companies in terms of Q1 performance? Do you think the worst is behind, or we'll see some more pain?
So yes, thanks. From a Q1 perspective, demand trends are broadly very similar to Q4, but what will help many companies is the base effect. If you remember, last year, Q1 was extremely high COVID cases of wave 2, and that's why mobility was severely restricted. So I do expect companies like HUL, Dabur, Asian Paints, and many others to see volume growth, which was not the case in Q4. So this is more of a base effect. In terms of underlying demand trends, I expect recovery in second half only without taking base effect into consideration. In terms of stocks, definitely we have seen renewed interest in the FMCG sector. If you see last 2 years, this sector has been out of flavor. There are 4 key reasons for this. There was a risk-on strategy of the investors. There was, of course, huge inflation in all the key raw material. Now, if you see, a lot of the raw materials have started correcting. Still early days for some of those. But palm oil has crashed from $1,900 to now below $1,200. Copra prices have also corrected. Similarly, we have also seen crude-related inputs correct, but that correction, I think, is a bit on the lower side. We need to see more correction. Similarly, tea raw material has also been soft. Third reason, of course, has been whenever peak COVID wave happened, mobility got restricted, and FMCG companies saw loss of demand. And now we are seeing also that interest rate cuts are starting to happen. So all 3-4 reasons which were there in terms of the FMCG not being in flavor those are coming back. So we are seeing a lot of interest. Also, the stocks have also started outperforming. We have an overweight on the sector, and we like essentially names like Hindustan Unilever, Britannia, ITC, Asian Paints. Almost all companies will benefit in the second half, but in Q1, the margin pressure in terms of gross and EBITDA margin will be on the higher side, because crude at $105, $110 will be the average. We have seen also rupee depreciation, which also impacts imported raw material. So Q1 slightly tough, but H2 clearly we are going to see benefit in terms of volume growth also coming back.
Yeah, I'll come to you in just a bit on the margin factor and whether there could be any sort of upgrades coming in, or whether there were not enough downgrades given the sharp nature that we saw in terms of raw material inflation, etc. But, Mr. Ramakrishnan, I wanted to know from you, because you've been tracking this for the past many years, going forward, everyone expects some sort of recovery coming by in the second half. And understandably, it'll be easier to, read the second half numbers, because the first half will obviously be skewed by the base, as Abneesh pointed out as well. What are the key factors that you would be looking out for? Because right now, the categories are all over the place. Sanitary, stuff or health hygiene, all of that has seen a big crash because it had a high base. And then we've seen a big jump in outdoor purchases for, say, coffee, beverages, or even shampoos, etc. Going forward, what is the sustainable data point that you'll be looking at, which will tell you a lot more about consumer health?
Yeah, so it depends on how you choose to look at it. Is the glass half full or half empty? I choose to believe it's half full. Fundamentally, if you have a comparison with last year, what have we seen? Right, like you rightly said, the hygiene categories have dropped, and by that I mean, let's say, the sanitizers and the hand washes, which are on a per unit value basis extremely high. So to that extent, what has left the consumers with is a slight, wriggle room within the FMCG basket itself. That is one part of it. Second, a large part of rural India is continuing to get free wheat and atta from the government, which started during the pandemic phase. So therefore, that investment is also available a bit. So to that extent, while there is an inflationary pressure, this wriggle room is slightly available. And with that wriggle room being there and the next couple of waves being not as vicious as we have seen in the past, I think recovery is definitely around the cards. And like I said, it's just flat and maybe about a 1 percentage point or so drop. So we can expect definitely a better second half for sure. Number one, if you then break it down by sectors, etc., hygiene, and as a result of which home care tends to suffer a little bit, because when there is a heightened awareness and need to maintain hygiene, what happens is all the cleaning products, whether it is toilet bathroom cleaners or utensil cleaners, the usage of them is high. So to that extent, that usage might see a little bit of drop when the heightened awareness is getting reduced at the moment. That's one. Second of all, if you look at food, fundamentally staples, they've all been affected by highly inflated prices, particularly things like edible oil, etc., which takes away some amount of money for sure. But when it comes to personal care, we definitely believe that it's not been a significant change or jump downwards or any which way like that. It is, yes, reasonably flat, but I think it is not anything alarming at the moment. So, okay. And if you look at some of the discretionary spends, like let's say snacking, biscuits and things like that, as you may have noticed across stocks, etc., we see significant jump in those. I mean, they had a growth story during the pandemic, and that growth story seems to continue. So it's kind of a mixed bag. So it's kind of a bipolar behavior from consumers. On the one hand, some discretionary products are growing, and on the other hand, there is some amount of shrinkage. But overall, I certainly believe if you wait for the second half, there is recovery.
Okay. So Abneesh, in that case, what does it mean for stocks in general? Is there more room for correction as far as valuations are concerned? And you were speaking about margins. A recovery is expected in the second half. What about margins?
Yes, I think in second half, we will see good news on the margins front also. I think in the overall last 2 very tough years for FMCG and the economy, 3-4 good things have also emerged. So bridge packs, if you see, has been a very focused strategy by most companies. So this will help vacating 2 rupee, 5 rupee, 10 rupee price point. We have also seen very high automation and lesser advertising intensity also. And every company has gained market share also. Coming back to categories, we do expect fruit juices, we do expect in terms of personal care and out of home and B2B kind of focus also to do really well, because last 2 years that has been impacted. So I do see that we are now coming to the end of the downgrade cycle in terms of margins, and definitely FMCG companies will cut down on advertising spends and other cost items also. So Q1 is going to be tough. I think for most companies, except maybe tea companies, Q1 should see compression on EBITDA margins on YOY basis, but definitely volume growth will be positive for HUL, Dabur, Britannia kind of companies, possibly also, because we are seeing in biscuits, down trading from street food is happening. So that's a new development which is helping biscuit companies, and noodles also. Noodles has seen good growth in the past few months.
So just taking a final question for both of y'all, and y'all can answer this in as little words as possible. Abneesh, the thing about FMCG is that a lot of things are well discovered, a lot of things are seen by everyone because everyone's a consumer. So intuitively everyone becomes an analyst as well. Which one do you think is likely to be the dark horse stock in this space? I think Abneesh has chosen not to use his words. But Mr. Ramakrishnan, you've been tracking a lot of purchases. Has there been any one particular category which has surprised you extremely positively over the last few periods that you've tracked it for? Any category that one needs to watch out for?
No, more than categories, I think there's one good news in this whole element. I mean, people keep talking about the fact that people are downgrading or going down to smaller packs, etc. The good news to note there is that when people, drop down to smaller packs, the difference between the large national stroke multinational brands and the local stroke regional brands is diminishing when the people move to the smaller packs. To that extent, if you notice in the recent few months, the growth that has been driven by the corporate players, which is, let's say, the national brands and the multinational brands, has been substantially more than the regional stroke local players. In fact, local players are taking a hit in terms of their volume. So that is something to certainly take note of. So if you are in this business of watching stocks, then the national stroke multinational brands are definitely some things to watch for. And among categories, I think clearly snacking is the one that is being watched, and of course bottled soft drinks. These are two areas that I would call out as some things that are growing, apart from the massive return of grooming after the pandemic.
Okay, all right. Mr. Ramakrishnan and Abneesh, thanks a lot for joining us and giving us your view on what's happening with the FMCG sector right now. With that, we'll slip into a short break. We'll get you more on markets and a lot of stock-specific